All right, welcome everyone. So, if you're an SME preparer, you're probably neck deep in the new IFRS S1 standard. And you know that the strategy disclosure, well, it's pretty much the main event. It can feel like a huge mountain to climb, I get it. But honestly, it's also a massive opportunity. So, today, we're going to break down exactly how you can master this requirement and, turn what feels like a compliance headache into a really compelling story about your business. Let's dive in. Okay, so here's our game plan. We're going to cover 5 key things. First up, how to think about your IFRS S1 strategy as a story. Then we'll get our hands dirty and map your business ecosystem. After that, we'll connect the dots to the financial impact. Then we'll talk about stress testing your strategy. And finally, a really important one, what you can actually keep confidential. Let's get to it. All right, first up, your IFRS S1 strategy story. Look, the big idea here is to shift your mindset. This isn't just about compliance or ticking boxes. It's really about crafting the core narrative of how your business is actually going to thrive in this, well, constantly changing world. So the standard itself is pretty clear on this. The whole point is to help users, your investors, your lenders, understand your strategy for managing sustainability risks and opportunities. So what does that actually mean for you? It means you're not just reporting numbers, you're explaining your game plan. It's your chance to say, hey, here's how we're navigating the tricky stuff and grabbing the new opportunities. Honestly, it's a powerful way to show everyone that your business is built to last. Okay, let's move on to our second section. And this is where we get really practical. To tell a good story, you need to understand the whole setting, right? And for your business, that means mapping out your entire ecosystem, or what IFRS S1 calls the value chain. Now, when IFRS S1 talks about the value chain, they mean, well, the whole shebang. It's not just your immediate suppliers. We're talking about the full life cycle, from the very conception of your product, where the raw materials literally come from, all the way to what happens at its end of life. It's a huge scope. So how do you even begin to tackle something that big? Well, you break it down into manageable chunks. You've got to look at your supply chain and sourcing first. Then, look internally at your own operations. Think human resources, manufacturing, all of that. Next, follow the product out through marketing and distribution. And finally, think about consumption and what happens when your product is thrown away. The key question you're asking at every stage is, where are the risks and where are the opportunities for us? And here is a huge piece of good news, especially for SMEs. Listen to this. You do not have to map this whole thing out from scratch every single year. The standard gives you some relief here. You only need to reassess the whole value chain when there's a significant event or change. So think like a merger or a massive shift in your supply chain. This is a big deal because it seriously cuts down on the ongoing reporting burden. All right, Section 3. Now that you've got a map of your risks and opportunities, it's time for the crucial next step, showing the financial impact. This is really where the rubber meets the road, connecting all these sustainability ideas directly to your bottom line. So the standard basically asks you to split your thinking in two. You've got the current effects on one hand. That's the here and now impact on your financials for this reporting period. But then, and this is the really critical part, you have to think about the anticipated effects. This is all about what you expect to happen down the line, in the short, medium, and long term. That forward-looking piece is absolutely essential. And you've got to think about this across a few different dimensions. You've got your time horizons, short, medium, and long term. And then you've got the different parts of your financials, your position, your performance, and your cash flows. So you're asking questions like, how will this impact our performance next year? But what about our overall financial position in 5 years and our cash flow in 10? It's about seeing the full picture. Okay, I know what you might be thinking. How on earth am I supposed to put a hard number on something that might happen 10 years from now? And you're right, it can be really tough, especially for smaller companies. The good news is the standard gets that. It has what's called proportionality relief built right in. So you don't have to provide quantitative data if, say, the effects just can't be identified separately, or if the uncertainty is so high the number wouldn't even be useful. Or, and this is key, if you just don't have the skills or resources. In those cases, a good qualitative story is what's required. Okay, on to our fourth point, stress testing your strategy. So you've mapped your world, you've connected it to the money. Now it's time to prove that your strategy is actually tough enough to survive. We're talking about assessing your resilience. So what is resilience in this context? It's pretty simple, really. It's your company's capacity to adjust. Think of it like a tree in a storm. Can you bend without breaking? When those sustainability-related uncertainties pop up, Can your strategy pivot and adapt? That's resilience. And here's another important point. You have to disclose this assessment, but it can be qualitative. You don't need to be a massive corporation with a team of data scientists running complex climate models. For many SMEs, this is going to be a thoughtful, narrative explanation of how your strategy holds up against a few different, plausible future scenarios. It's about showing you've thought it through. Okay, section 5. This brings us to a question that I'm sure is on a lot of your minds. What about our secret sauce? Our competitive advantage? Do we really have to disclose stuff that could hurt us in the market? Let's break down exactly what you can and can't keep confidential. Now listen closely because this exemption is very, very specific. You may be able to omit information about commercially sensitive opportunities. So let's say you're working on a groundbreaking new sustainable product. If talking about it would seriously prejudice your ability to profit from it, you might be able to leave it out. But, and this is a huge but, you cannot use this to hide information about risks. Nope, no way. Transparency on the risks you face is absolutely non-negotiable. Okay, that was a ton of theory, I know. So let's try to put all these pieces together with a practical example. Let's imagine we're a small clothing brand, and we've decided to make a big strategic shift. We're moving to using recycled materials. So first question for our little brand, how does this decision change their value chain? Well, all of a sudden, their world looks completely different. The risk, and the opportunity, is now all about sourcing recycled materials. They're suddenly dependent on totally new suppliers. And hey, maybe they even have to think about setting up their own end-of-life collection programs to get those old clothes back. It's a whole new ballgame. All right. Next logical question then, what does this mean for the money? What are the anticipated financial effects? Well, let's think it through. Short term, they're probably looking at higher capital expenditure to buy new equipment. Medium term, their profit margins are now tied to the fluctuating costs of recycled materials. That could be tricky. But long term, this could be a huge win. It could open up access to a whole new pool of sustainability-focused investors. And that brings us to the final test. How does this whole new strategy test their resilience? Their resilience is now all about new market forces. They're betting on the price of recycled materials staying competitive. They're betting on consumers continuing to care about sustainability. Their strategy has to be strong enough to handle those what-ifs, to weather those particular storms. So, as we wrap this up, I want to leave you with one final question to take back to your own business. When you really think about everything, your operations, your value chain, where you want to be in 10 years, what is the most important story that your strategy needs to tell? Because figuring that out, that's the real key to turning this whole compliance exercise into a genuine asset for your company.